Hello, you're welcome. There are actually a lot of talks out there around investing. People are talking about buying gold because it's very much bullish. Bitcoin is making all-time highs. You invest in stocks or bonds, buy some real estate and land. All these talks are happening. However, today we want to talk about stock market investing and we'll get into the weeds of the matter. And by the end of the video, I want you to be having an understanding of what it is and how you can make the best use of it. Now, before we go further, what is investing? Investing is actually deploying your money into an asset to make more money for you. That is in a more simpler way. But why would we do this? The cost of living is really going high, and over time, your money, if you just leave it uninvested, the value goes down, and this is called inflation. The prices of goods and services are going high and making the money to buy that also to go high, and it reduces on the value of your money. Two, you want to build with over time. You don't want to reach when you're old and you're still working. You want to be able to retire and be able to cover your medical bills. You want to leave some inheritance for your children and children, and you want to have a good vacation. You want to be doing nothing literally. So that is why really people would want to invest. So to get into the elephant in the room, what is stock market investing? So if you reach this far, thank you. I'm called Otim Frederick. So let's start. What is stock market investing? Stocks are used loosely with shares. So the stocks is a general term to imply ownership in a company. So a unit ownership in a company is called a share. So stock market investing is a fractional ownership into a company. Let's say I buy X amount of shares, let's say 100 shares, 1,400 shares of MTN. I become a partial owner of MTN. So I have some stake with MTN. So there are two ways that we can earn money through stock market investing. The first one is through capital appreciation. This is where at the time when you're buying the stock, maybe it was low. By the time that you want to sell, it has gone high, and then the price of that stock has gone high, and you can sell off at that point. And then second, you can get them through dividends. Some companies offer their profits to their stakeholders, and they can do this either by annual or annually. Take that approach of a capital appreciation. You need to be a bit savvy. These are people who are they're like traders actually. These are actually daytime traders because you need to be analyzing the markets and how it is happening. Understand market analysis, and you need to get to know the fundamentals, what's happening around that stock, the news that is happening, the developments, and you get into the technical analysis of that stock and the sentiments. What are people saying? Are people scared with this sentiment? People want to sell. All this, it is more graphical. It can go up, it can go down, it can go anywhere. So when you're in profit, that's when you sell. That is stock capital appreciation. For dividends, it is just sharing of the profits by the companies with their shareholders. So if you want to start, how would you begin? One, you need to understand your investment options. And then two, you have to choose a licensed broker. When you have a licensed broker, then you open up a central depository systems account with them. And then 3, 4, you will fund that CDS account. After you've funded that CDS account, you can now place your order as a fifth. And the sixth and last, it's just for you to manage and monitor your account. In bonus, the bonus point here is you can actually automate something. You can go to your bank and instruct and put a standing order at the bank and tell them at the end of the month you want to be deducting X amount of money and putting it in your CDS account. This helps in eliminating friction, and also it helps you to not always be monitoring your account. This will help you. That sometimes when the stock price is low or it is high, but if you keep putting every month that goes on, it helps in what the concept called dollar cost averaging. This is when you keep just investing in the stock that of your choice, whether it is at a low price or at a high price. Over time the price evens out, like there's an average that, okay, you bought it at an average price like this will also help in eliminating some of the emotions involved there, because you may feel maybe you bought at a higher price, you feel cheated, or maybe you bought low, you feel yes, this is the best time to buy, because you can't time the market, you just need to keep investing. So the spirit here is just investing. So that's the concept of dollar cost averaging. How would you do your research in understanding your investment options? Start with what you know. For example, in the banking sector, we all have bank accounts where there are different banks out there. You look at their services, look at their expansion, the innovations that they're doing, and maybe two, you need to look at the utilities. We all have power. There's maybe actually it's UEDCL. We're biasing this in a Ugandan context. So there's UEDCL instead of Umeme, and maybe there are consumer goods and many others. Those are maybe the industries you know, and you're seeing how they're operating and the companies operating in there. So you can make your investment in a company that is doing that. Then you do some qualitative analysis, such as what do these companies do, and how are they profitable. Third thing, you go to the analysis of their financial health. Then you look at their income statement, their balance sheets. What is the debt more than the equity? You do that, the cash flows of this company. This is all, it feeds into the financial health. And then you understand the valuation of these companies. Different companies have different values. There could be a company which is undervalued and yet is doing a lot of, it has a lot of potential. Then after doing all this analysis, you come up with a decision and choose a company. To choose a licensed broker, you go to Uganda Securities Exchange. They've listed all these different brokers. Actually, you can see the licensed ones, and they're legally, I mean, they offer the services. There's SBG Securities, which is a subsidiary of Stanbic Bank. Then there is Crested Capitals, Zeno Investment, African Alliance Limited, and many other brokers. What you look at more is what are some of the extra services that they're offering. Are they offering advisory services? Are they online? Can I access my account online? What are their trading fees, and so forth and so on. So after you've gotten a broker, you open up a central depository system account with them. What this is more like your investment account that tracks everything. What they will require of you to open this, one, they will need you to fill in a form. When you fill in that form, and you hand over a copy of your national ID and a passport size photo, a copy of your utilities bill, like maybe a water utility bill, could be water, electricity. This is just to know that you're legally residing in that place, and your bank details. After getting all this, they open your CSC account. When you've opened it will be time to fund it. You fund it, you move money from your personal bank account to that CSD account that you've opened. Then after you've moved your money there, and the fifth step is just now placing your order. Then you just instruct your broker to buy maybe 100 shares of X amount of company, and the broker will execute for you. Usually there is a minimum of shares that you can buy. Let's say you want to buy 1,400 shares of MTN, and the share value, and the share value is 100 shillings. I'm just saying. So we multiply the amount of shares that you want to buy, which is 1,400 shares times 100 shillings, which brings the minimum that you can pay is 140,000 shillings, Uganda shillings. So you place an order of that. Different companies have their minimum, but usually it is 100 shares. And then you multiply that plus the value of the share at that point. After you've made your investment, you can go to now managing and monitoring your investments. There are many ways you can manage and monitor your investments. These companies are actually supposed to be publishing their reports either annually or biannually, and this will help you in tracking their profitability, looking at any possible liabilities that they are having, their future plans, the innovation that they are working on. And you need to subscribe to some newsletters, and need to watch some business news. There are papers. There's the New Vision, Daily Monitor, and many others that you may look out for your investments. And that is pretty much it to manage and monitor your investment. Actually, your work would be done when you're managing and monitoring your investment, and you'll be done with stock market investing, and you sit back. Now, what are my final thoughts on this? You should be patient with these investments. Have a long-term view on this. Do not just get into stock market investing for the short term, like maybe 3 months or 6 months, because the market goes up, and by the time you're seeing the market, it may be low or it could be higher. So don't be excited when it's high, and don't be depressed when it is low and start panic selling. Have a long-term view to it. And then 3, diversify your investment. Maybe put some in bonds as well, and also get into real estate, invest in land, and many others, and maybe have some real cash on the side to wait for the opportunities that will come. That is my thoughts on this, and I hope you've gotten some value in this video. Thank you. If you've reached this far, consider liking, subscribing, and sharing with your friends.